This voice is taken from an article with the title, "What is the Role of Market Sentiment in Forming Chart Patterns?" which has been published on TRADERTALKSNET. The role of market sentiment in forming chart patterns is a highly complex phenomenon that many traders struggle to understand. Market sentiment refers to the collective attitude investors have towards the overall direction of the financial markets. It can be measured by analyzing the buying and selling activity of traders and investors, and is often used to predict the direction of future price movements. Chart patterns are graphical representations of underlying price movements that traders use to identify opportunities for entering and exiting the market. Some of the more common chart patterns include head and shoulders, double E-tops, triangles, wedges, flags, and pennants. Each of these patterns relies on market sentiment to form and ultimately signal a potential trade opportunity. For example, a head and shoulders pattern typically forms when there is an increase in bearish sentiment in the market, causing the price to fall. This decrease in price is followed by a brief period of consolidation, which forms the head of the pattern. Then, a second decline occurs, which creates the left and right shoulders of the pattern. Once the pattern is complete, it signals a potential reversal in the market, and traders can enter a trade in the opposite direction. Similarly, a double top pattern forms when there is an increase in bullish sentiment in the market, causing the price to rise. This increase in price is followed by a brief period of consolidation, which forms the first peak of the pattern. Then, a second increase occurs, which creates the second peak of the pattern. Once the pattern is complete, it signals a potential reversal in the market, and traders can enter a trade in the opposite direction. In both of these cases, the chart patterns were created by the market sentiment of traders and investors. As such, it's clear that market sentiment plays an important role in forming chart patterns. When traders are feeling bullish, they tend to buy, which can create a double top pattern. When they are feeling bearish, they tend to sell, which can create a head and shoulders pattern. By understanding the sentiment of the market, traders can identify chart patterns and use them to gain an edge in the markets.